Hello everybody and welcome back to another video. Well, a few days down and all of a sudden people are panicking. In today's video, we'll be taking a look at all of the key levels here for the SP 500, Nasdaq, Bitcoin, Tesla, AMC, and more. There's plenty to go through in today's video and there's some great key levels coming up for us to discuss. Stay tuned to find out more. Okay, well, here begins our market recap for, of course, the markets closed 8th of September 2021. And in today's video, we'll be going through all the key levels that you need to be looking at through to the end of the week and, of course, moving forward. We're going to be covering Tesla as well, and a lot of you guys are very excited about that and the levels it's presenting, and I can certainly see why. Let's move over to utilities. This is the sector that was doing the best. You can clearly see it on this heat map. That means that the market was moving more defensive, consumer defensive as well, having an okay session. When this happens, it means Wall Street is obviously doing a bit of rotation. That can bode for further bearish pressure, especially if they keep up strong buying in the utility sector and consumer staples. Let's have a look at the markets. Really, was it down that much? No. It was down more at one point. You had the Nasdaq down 0.8% at one point there. The SP 500 was down slightly more, and the Russell 2000, of course, took the dive. The smaller companies down 1%. We've got to put this stuff in perspective. This is only a blip at this stage, nothing more from what we're seeing from the price action. Utilities overall, 1.79% up, and that continued to maintain strong buying throughout the rest of the day. You can see here, the buying was clearer, then it just kind of held. And even though the market was recovering a little bit, it's not like the utilities went down that much. XLP, consumer staples, also coming through with strength, and we had the weakness coming in with the energy stocks. So this is pretty normal for a defensive kind of day in Wall Street. Another thing that's been occurring is we spoke about this in the last couple of videos, especially last week. We knew there'd be an increase, or we suspected there'd be an increase in volatility after the non-farms and coming into the non-farm payrolls results. We did see it, guys. 16, underneath 16 for at least the next couple of months here is going to be an important point for the VIX. Once it goes underneath there, there's a good tendency that we'll have a little bit of a rise in, of course, volatility, and that can be a good sign for traders and for investors to get good opportunities in the markets. We saw just underneath 20 get hit here on the volatility fear index, and I guess it does bode well for increased volatility. Let's see if it can come through. At the time of this recording, the S&P 500 is down again about 4,506 in the futures. So if we do see a bit more of a fall through the European and Asian sessions into the US and open, of course, red, expect the VIX to jump out of the gates at the same time. We'll move over to silver and gold. And I just want to mention silver because this is the lines and this is where we trapped it up in the live session. And I think, you know, we had a great trade over here. If you go back and watch our Friday non-farm session, we were very bullish. We liked it to this zone, this red box here, and it was excellent up until that point. Now, when you're talking about taking the conservative pickup, which is right here, previous resistance becomes support, you still need to wait for that extra lightning bolt confirmation or at least coming through resistances. And you'll notice here we had 2440 as our trigger point for going long. This is how razor thin trading can be. If you close above here, there's a good selection that, or good chance that you're going to move towards that box again. If you fail to do it, and of course you get underneath the trend line, then the weakness ensues. So just remember, we still like silver, but it didn't present the trading opportunity. Very unfortunate, but it is what it is. Move over to gold quickly. Gold also struggling. It's in our red box of support zone, but overall pretty much on a falling knife here. A lot of noise previously around this area. So this is one of those zones where you don't really like to trade it unless it's a small time frame, because if there was noise over on the left-hand side, as in it was a choppy market, there's a good chance it'll be a choppy market again, and you don't want to get involved in that unless you're seeing very clean markets that either give you clean buy signals or clean sell signals. Still weakness here on gold, and all of that is due to the dollar index putting that upward pressure on our resistance support area. Again, this is the zone where the dollar index is fighting with the bulls and the bears. We close above here. We look towards the 93.10. We reject from here and do this. Then we look for dollar index to weaken back to 92.40. These are the two zones that I'm looking at this stage for these pairs anyway. Let's move over to Tesla though, because a lot of you guys are excited about this. There was actually a pretty good trade. I've got to say, I was very impressed by this pin bar here, the bullish hammer that occurred off the 742, previous resistance acts as support, bang, smashed into that level quickly. A lot of calls being wiped off, I think, in the morning here from what I saw in the flow. And then we get that nice little pickup through the session back end. Look, Tesla still looks pretty strong on the charts. You go over to a daily, it is doing the right types of things. It's got those rejections in it. The momentum's clearly there. You know, a stock that closes on its lows for the day doesn't have the momentum. This stock did what the index was doing, which was it fully reversed through that session. Now, if we bought up some other stocks, you're going to see some that are closing near their lows, some that are actually closing on their lows, and they're just not going to have that strong momentum in it. Take Square, for example. This is not a strong stock from the perspective of how it closed. It did have a little bit of a rally, but notice how Tesla's rally was better. That means there is momentum, there is buying interest, and even on bad days, it's tending to have that little bit more bullish resilience. So that's something I do look for. We'll have a look at the flow heat map here as well. Lots of calls opened. Of course, now the new key level becomes 760 for us to break through and close above for Tesla. If that occurs, we move towards that 780 zone, and past 780, look, anything's possible. That's a serious deal. If it gets past $780, I'm serious when I say, wow, that's a very key level. The other good news is that the algo or the algo flow was coming with price. In fact, it was another strong day of Wall Street purchasing going on here. If you're interested in getting these charts and, of course, our daily commentary and thoughts on the markets, you can join in the description down below. 7-day free trial to our private community. It's all there, and you can access this for any one of the stocks that you're most interested in. But the algo flow was beating price action. That's, again, a strong sign that Wall Street flow, that people are bullish on this stock, and that things are looking better. It's the first time in a while, this last 2-week stint, where we've seen Tesla actually have these signs, and we've been covering it on this channel. So remember to subscribe and smash that like button if you do enjoy the content. We'll move over now to AMC, and AMC, I gotta say, it actually surprised me a little bit. So it ends as a long leg doji, an indecision candle. We actually got that early ramp where it went through 48.11, and it tends to usually, when it goes through a resistance like this, continue to ramp. So what I mean by that is it likes to participate into the next level of support or resistance, which is around that 52.30, 52.50 level. Now that we've got a long leg doji, again, we've put the line in the sand. We know that if we get above this high, there's a good chance we do move towards that level. If we get below this, that's negative, and we don't really want to be talking about that if you're on AMC, because at that point, you're talking about going back down here or even back down to the 40 zone. I'm a bit disappointed in the price action. Let's have a look at the 1 hour and just get a bit of an understanding of why it happened. And here it is. So if you're a scalper, if you're a day trader, and you see this type of price action, you need to really think about how you've scaled into that position. So we have resistances across the board, and every time it breached this area, it couldn't hold it. Now, if we had a 1 hour that did hold above this zone, I've got a lot more faith that this thing would have been powering onto 52.35. So each time it got through the key area, we got a rejection, we got another rejection. And this means that if we get a closure above here, that should be showing us the correct flow, the correct participation, and of course, market sentiment. So I'll be watching the smaller timeframes here on AMC. I think that's probably the good thing to do. Again, algo flow coming in the favor of the price action. That's a good thing. If AMC algo flow and price is overall pretty positive, it means that, again, Wall Street's not fighting against us. And contrary to popular belief, that's fairly important. You want everybody to be with you. If they're against you, that would be kind of bad. Now, we move over here to Apple. We said we'd cover this a little bit. Weakness from Apple. This is a 2-hour trend line that I've drawn here. You can see through the last couple of trading sessions, it has been buying off that level. If it closes underneath this zone, so let's say 154, you would expect selling down to 152 or even the 150 area. So just be well warned of that. This is right on that aggressive kind of buy level for people, but I don't know if I love it. At least it has gone new peak, higher trough, and then we might be looking for a bounce. So a lot of smaller time scalpers and day traders will be looking in here. And then, of course, if it gets underneath that 154, then you're talking about that short side 152 and 150. If Apple or Microsoft fall, then we will see the rest of the market, especially the Nasdaq, come along with it. If we actually bring up Microsoft, I'll show you how important it is for this thing to hold. Check this out. A lot of you will probably say, in the comments down below. Look at that double top action. Absolutely. We've got the highs at 305. We've got the 297. And I can tell you on a daily time frame, this is also a 20 moving average. So there's a 20 moving average right here. If you close underneath this, it could be an early warning sign that the rest of the market is not maybe as healthy as people think, and a little bit of a pullback could occur. But we'll be taking a look very soon at which key levels these little pullbacks will be going to, because I don't think it's going to be extreme. I just think that these pullbacks have got some interesting zones on them. S&P 500, we bring this up. We talked about the long leg dojis. We talked about the indecision, the marginal short that was there yesterday. I guess it did come through. So the short did come through. 4,500, 4,520, and 4,480. All key zones, 20 points against each one of them. This is a strange candle. I mean, in many ways, you would say, oh, it looks bullish because by the end of the day, there was a rally. Yeah, that's true. But this tends to happen in these kind of sell-off events. Like we think about it over here, we get a sell-off rejection, then long leg dojis, and then it kind of just stuffs around for a while and doesn't do much action. Here we get big rejection, and then the next day ends up being bearish. You know, it's not definitive either way, really, on a candle like this. Here's one that hits the 20 and then it bounces off. So I don't take too much stock in this particular close. I mean, if anything, I still think it's looking a little bit bearish towards the pullback to the 20, but it's certainly not an incredible, oh, I love this bullish looking candle. If you're thinking bull, you're thinking you need to get above this high. So this is the price of around 45, let's call it 22. You need to continuously see that momentum coming through in the next session, and certainly not happening at this stage in the market futures. And we'll move over those in a second. Let's actually do it right now. So here's where we are with the futures. And you'll see there's a weakness after the market close. So if we even took the distance of this move, we extrapolated that out, it's going to come to around 44.86. Now, I've talked about 44.80 plenty of times. I think that's definitely a spike zone that could come down, hits this area. Some buyers may be there. And if we get further weakness through here, remember, the most logical situation is to go to the 50 moving average. So if we go back to the SPX and we think about every single time the 50's been hit, every single time, let's say we get underneath the 20, where's the next level? The 50. 50, 50, 50, 50, 50, 50. If the 50 holds, great. That was a perfect dip. If the 50 closes or gets cracked, then you're talking about much lower levels. You're suddenly talking 4,200 or even lower levels than that. Just remember this is how important the 50 is. Now, it's not all bearish. I mean, you know, we are in September, the most bearish month of the year, but really the price action is still bullish. Overall, the trend's incredibly intact. Overall, the 50 exponential moving average, even if it was going to come down there from this current price, is only a 2% down. I mean, that's nothing, yeah? So I think that there's still a lot of bullishness, and you don't need to be concerned. You just need to be aware of the key levels and what is your plan. Do you like to trade off certain zones? Then you'll focus on the 44.80, look for little buying on the smaller time frames, and long it to the 4,500. Those kind of levels make sense. If you're focused on getting better investment prices, then if it hits this level and of course closed underneath, where would be the logical conclusion? Well, maybe somewhere around this 50 exponential. Remember, there's different levels for different techniques. And I think that's a very important factor that you always want to be looking at when it comes to the markets. We'll move over now to the Nasdaq. This was another one that hit our key support. We haven't changed any lines here. 15.7 continuously finding resistance. 15,520 finding support again. Close underneath this. 15.4 comes into play. You can see it very clearly here. Previous resistance. Once you get through this support, you're talking about a fairly significant little channel there. It's got two touches both sides. You could even take this distance and then bring that down, and that would be kind of the level. So maybe even a 15.3. 15.4, though, I do feel like there'll be buyers there. If it continues to bounce off this zone, then we just look for a crack of the high, and that takes us into that 15.9, and I think inevitably 16,000. And I do think by the end of the year, we'll probably be at a higher point than we are now. That's just the logical conclusion of markets. We'll talk about the stats in just a few seconds. But yeah, there are some key levels. This is getting a little bit more interesting. There is a little bit more volatility. We're stuck still in the ranges, so nothing much is happening here. And we've got to remember the 50 exponential moving average holds the key of the deeper pullbacks. If the bears really get control, they'll slam it through that level. And we haven't seen that in a very, very long time. Let's move over to Bitcoin. Bitcoin continues just to kind of hover around the zones. Same with Ethereum. Ethereum's sitting around, 3,469 and Bitcoin's 4,588. If you're wondering where I think the recovery is and where I think the price action gets better for these coins, it's really around this level here. So 47,500. Once you close above this initial dead cat bounce level, then what you're doing is you're putting in a trough, a peak, a higher trough, and then a higher peak. You've got that repair in the market, and we can go nicely bullish. Now, during these times, people freak out. There's a lot of FUD coming into the markets. We had the Coinbase news coming out with the SEC and all of that stuff. That's not really, I think, it's not really a crazy concern for me in the markets. The whole El Salvador thing, I told you guys, I don't think that's a big deal. But, you know, some people do seem to think it is. I just feel like this is a normal shakeout in the markets. We could see a retest, and any lower than 42.5, if it gets underneath there, we want it to instantly reject. We want it to be rejected by strong buying, at least in that 24-hour session. No closures underneath the 42,500, okay, guys? That's the key level that we want to be watching. And from the bull side of repair, 47,500. Ethereum, very, very similar. We're just looking for that 3,500 to get cracked. And you can see, actually, Ethereum a little bit stronger than Bitcoin. Very nice resistance testing. Let's see if we can get above that and start our rally back up. I'm not concerned about this market, though ETH shorts does continue to climb a little bit. It's not really something I'd be like, oh, I'm super scared of it. I think BTC shorts has always been that one that we want to look at. I also just want to end the video reminding people of this. The facts are that we are in a 7-month win streak. Is that rare? Yeah, statistically, it doesn't happen that often. We've seen upwards of 10 in the last kind of decade. We've also seen 11s back in the 50s where you've had a lot of months. There is going to be a down month. That is inevitable. The question is what happens after that and what do the stats say? And here's a great one for you, and I've mentioned it several times. In most of these cases, in fact, 64% after the strong months have ended, let's say the 7 or the 10 streak, has generally been one negative month followed by 64% of the time a fairly weak kind of next month. You can see here, relatively weak. So there can be 2 or 3 months is usually all you get in a correction. And we're talking probably in this type of market, no more than a month to 2 month maximum. But let's put it in perspective of 6 months. In 93% of cases here, we had a market that was incredibly strong. And not only incredibly strong, it was putting on 8 to 9%. The average was almost 8%. So whenever you're thinking about, oh, I'm a bit scared of the market and I'm a bit scared of buying the dip and things like that, if you buy quality and in general you are a long-term holder, remember this is still a very strong market for some very valid reasons. And in general, the stats show that if you hold after that, there's some amazing gains that have to be had, and average has been phenomenal. So good luck out there, everyone. Make sure to subscribe, hit that like button if you do enjoy it. And I want to hear from you guys. What stock are you looking for if we do get a correction down to, let's say, the 50s or even lower? What is your number one conviction right now in the markets? Thanks so much, guys. Bye for now.